Okay, so a lot on the agenda for this week. Are there any things in particular that matter more than not to you?
There's a lot of things, but I would say the two things that I'm looking at right now are the VIX and, more importantly, interest rates, because in the long run, that's going to dictate where stock prices go. We can handle higher for longer. In fact, we probably really don't have another choice. But what we can't handle is rising rates, because with rising rates, you have no idea where it's going to stop. And each stair-step higher forces institutional capital out of the market, much like in 2018. Each stair-step higher, they can fund a future liability with something other than a stock. And that's what we've been seeing really over the last several weeks.
So the idea of interest rates going higher as opposed to being done with rate hikes is now something that's starting to get some buzz in Wall Street circles?
It's certainly weighing on equities. If you look at a lot of the days trading, even last week, the days that put in the best returns for stocks were days when the 10-year was actually, the yields were down a little bit. And on the days it was up, it was a challenge. I take to heart what I saw in that GDP report. It was ominous. It showed, kind of a very weak number. But on the other side of that, the inflation component embedded in that was still hot enough that's going to keep the Fed on the sidelines. They're not likely to cut rates. And I think you're going to hear that from Jay Powell. He's going to reinforce that message that it's going to be higher for longer.
I saw Goldman Sachs was acknowledging the reality of interest rate cuts getting pushed out, and yet still looking at some of the considerations why we could ultimately see the Fed cut sooner than what seems to be building in the market. What's the determining factor? Like, what on the economic front are you going to be watching closely to figure out where we go from here, David?
It'll have to be the economic data, and that's really the challenge right now, because a lot of the headline numbers don't seem to match what we're seeing on the ground. There isn't a day that goes by where I don't see some company laying off hundreds, if not thousands, of employees. The rise of AI is great for technology, but it's going to displace workers in the short run. Now, the rising productivity helps stocks, but economically in the near term, that could be a challenge. And that's one of the things that's kind of baffling for investors right now.
You know, the AI theme has certainly helped to create a lot of excitement around technology stocks. They're very influential when it comes to the S&P 500, so that's been a story that's been hard for investors to ignore. When it comes to leaning into the AI trade, amidst just some of this back and forth in the market that you're talking about, not knowing what happens with interest rates, how do you feel about investing in companies that are focused on AI right now, just given some of this sort of macro cloudiness we're talking about?
There are two halves to that story. The tech half is the rollout of the AI, and a lot of those stocks have really run, and now we're paying up for those names. But it's really trickling down to really most of the industrial complex. I think some of the better investments down the road will likely be some of the thousands of companies that embrace the technology to enhance the top and bottom line. I think you're going to see that. But certainly both halves of that dynamic are very, very important. It is still the most important investment theme I've seen in my career.
Okay, let's go through one example. So I mentioned we've got more tech earnings this week. Last week, Meta, the parent of Facebook, came out with their quarterly results. A lot of people had suggested that company was doing a good job as a business operator in integrating chatbots and some of their Gen AI abilities into their existing platforms. They came out with their quarterly results. They talked about how much AI spending they're doing right now. The market didn't seem to like that because I think they were warming to the idea of more cost discipline at Meta. But how do you feel about investing in a company that's putting that message out?
I think it's an opportunity. You got a 10% haircut right now, and I get the concern. Whenever the CEO comes out and says, oh, by the way, we're going to be spending $10 billion more this year on CapEx because of AI. The one thing we're learning about AI, John, is that it isn't cheap. It costs a lot to roll this out, and their business model is a lot different than, say, OpenAI. Their Llama 3 model, that's open source. I think it really cut the legs off of a lot of venture capital that was looking to generate revenue from their large language models, and then they open source their product, but they feel they need to do this to enhance their apps. Now, we've been down this road with Mark before. And if the street pushes too hard, he will blink. He has blinked in the past when the market has punished his stock. But I think he'll be more cost discipline sensitive this time.